Hi everyone, welcome back to Saheb Academy and welcome back to Departmental Accounts chapter. Previously, long back, we have made two videos on this chapter, the conceptual video and the first problem video, right? So these two videos were shot long back, but understand these are still relevant. There has been no change, nothing, okay? It's the same concept, the same technique, everything is same. So you can watch those videos to understand the concept and the basic technique and then come back to this video, right? So in today's video we are going to solve our second problem, and this will include the balance sheet as well, and this question was asked in bcom 2018 paper of Bangalore University of the subject advanced financial accounting. All right, and here we have got some final account adjustment as well, the prepaid rent, outstanding expense, and we are going to refresh the technique as well. Okay, so let's just read the question now. Now see here, from the following trial balance, prepare departmental trading and profit and loss account for the year ended 31st December 2017 and a balance sheet as on that date in the books of VM Limited. Okay, so now understand, here they are asking us departmental trading and profit and loss account as well as a balance sheet. Okay, both the things we have to prepare. We'll do that. It's really simple. So now let's just analyze each of the items and let's see where these items will go. See, first they have given us stock on 1st January 2017 of Department A and Department B separately. Always it will be like that. So where this will go? This will go in trading account. You all know, isn't it? On the debit side. Yes, simple. Then we have purchases. Department A, Department B, 9,800 and 7,350. So this purchase ratio is very important, isn't it? On the basis of purchase ratio, we take many things. Yeah, we apportion many things. Now, where will the purchases go? Purchases will also go in trading account. Fine, on the debit side. And then we have sales. Sales will also go in trading account. You all know that. Again, the sales ratio is important. See, to calculate the purchase and sales ratio, what you have to do, either you can simplify it or you can just take it as it is. 9,800 is to 7,350, and then sales ratio would be 16,900 is to 13,520. In the first problem, I used to simplify. Now also you can simplify, but why waste the time? Let's directly use it. Fine, the whole numbers only. Okay, and then see, we have wages. Now wages is a direct expense. It's related with what? Factory, production, isn't it? So wages will be taken in trading account. It's a direct expense. Okay, fine. So Department A, Department B separately they have been given, so it will go in trading account. Then we have discount receive. You all know discount receive means it's an income. Which kind of income? It is indirect income. So where it will go? It will go in P&L, isn't it? Yes, on the credit side. Yeah, 133. But this is just a single amount. How you will divide this among the department? On what basis? You need some basis, right? Are they saying anything in the adjustment? No, nothing regarding discount received. So understand, discount received is related with purchases. We purchase goods from suppliers, then only we got the discount, isn't it? So it's directly related with purchases. So purchase ratio for this. Okay, can we write it over here? Yeah, here let's write PR. Okay, purchase ratio. Next we have capital. Capital will go where? Capital will go in balance sheet. Yeah, you all know that. Simple. Sundry creditors. What is this? This is a liability. Where it will go? It will go in balance sheet. Then we have rent. Rent is what? Rent is an expense. Yeah, it is what? Indirect expense. It will go in P&L, isn't it? Yes. And then how much is it? 1870. How will you distribute rent? Only single figure is given. You have to distribute it. How you will distribute? You have to look into adjustment. See, they are saying rent, lighting and heating, salaries, depreciation are to be apportioned to the departments A and B in the ratio of 2:1. So they have given a ratio for rent, for lighting and heating, for salaries and for depreciation, right? So this is a given ratio. Okay, so salaries will go in P&L as well. The ratio is 2:1. Okay, for this also 2:1, for this also 2:1. Then lighting and heating. Yeah, can you see? Lighting and heating is what? It's also an expense that is related with administration, yeah, with the office. So this will also go in P&L. It is not related with the factory, and the ratio is 2:1 as said in the question in the adjustment. Then we have discount allowed. Yeah, discount allowed means what? we are giving the discount. If we are giving the discount, then we are giving it to customers to whom we have sold the goods, right? So this is what indirect expense. It's an expense. Yeah, it will go in P&L. Okay. Now which ratio? Can we take 2:1? No. The adjustment didn't say discount allowed. We have to connect this with the sales, isn't it? You have to connect this with the sales because we have given it to the customers to whom we have sold. So the sales ratio on the basis of that. So can we write over here SR, discount allowed? Yes, sir. Is it clear? Discount received, purchase ratio, discount allowed, sales ratio. Simple. Then we have advertising. Advertising is related with what? Tell me. What happens if we do advertising? Yeah, if we do marketing, what happens? Our sales increases. We do it because of sales only. Yeah, we need sales. So it's directly connected with sales. Direct relation is there. So advertising will also be sales ratio. Fine. What is this? This is an expense. It will go in P&L. Simple. Then we have carriage inwards. Now carriage inwards is what? It is a direct expense. What do you mean by direct expense? Any expense that you incur on purchase of goods or on factory related, manufacturing, production, yeah, whatever that is related with that, all that is direct expense. What will happen of this? This will go in trading account, not in profit and loss, trading account. So carriage inwards will go in trading account. Okay, fine. Now how you will allocate this carriage inwards? Carriage inwards is directly related with the purchases. You purchase the goods, now you have to pay the shipping expenses to bring it to your showroom or to your godown from the place of supplier. So to bring whatever expenses you incur is called as carriage inwards. It's directly related with purchases. So purchase ratio. Can we write PR over here? Yes, PR. Is that clear? Purchase ratio. Fine. Purchase ratio means this 9,800 is to 7,350. Okay, understood regarding carriage inwards. Next what do we have? See, trial balance is there over here. Furniture and fittings. This is an asset, a non-current asset which will go in balance sheet. Okay, we don't have to distribute or anything else. Yeah, no allocation, nothing, simple. Then we have plant and machinery. Plant and machinery is also an asset, the same way it will go in balance sheet. Okay, no distribution, nothing happens of that. Then sundry debtor. Sundry debtor is also an current asset. Can we write CA over here? And this sundry creditor is current liability. Okay, yeah, I'm writing the exact things. Fine. Personal drawings. What will happen of personal drawings? Tell me. Personal drawings will be just subtracted from the capital. Okay, so this is also a balance sheet thing. What we have to do of this, we have to just subtract it from the capital. Clear? Okay. Then we have cash in hand. Cash in hand is what? It's a current asset. It will go in balance sheet. Cash at bank, again current asset. It will go in balance sheet. We will not distribute nothing. Fine. So we have covered all the items right now, isn't it? But then there are adjustments. What the adjustments are saying, just read this. First adjustment, we understood the given ratio for certain items. Okay, that's fine. Other expenses and incomes are to be apportioned to departments A and B on suitable basis, they are saying, right? Suitable basis. What is suitable basis? As we saw, discount received, purchase ratio, because they are connected. Discount allowed is connected with sales, so sales ratio. Advertising is connected with sales, sales ratio. Carriage inwards is connected with purchases, purchase ratio. Yeah, that's what it means by suitable basis. Clear? Okay. The following adjustments are to be made. Rent prepaid rupees 370. Okay, prepaid rent is there. And lighting and heating outstanding is there of 180. Okay, we'll see this while solving the question. It's really simple. Depreciation on furniture and fittings and plant and machinery at 10% per annum. So they are saying there is a depreciation that we have to charge. How much? 10%. So 10% of plant and machinery, yeah, of 4,200 is how much? 420 rupees. Isn't it 10%? So that expense you have to take in P&L, and then you have to deduct in the asset also, right? In the balance sheet. Same with the furniture also. 10% of 600 is 60 rupees. So 60 rupees depreciation will go in P&L, and then in the balance sheet you have to subtract 60. I mean, you have to show it like that. Okay, we'll see while solving the question. And then see, at last they are saying the stock on 31st December. 31st December means this is the year end, right? So this is the closing stock. What is this? This is the closing stock. So where does the closing stock comes? Closing stock is an adjustment, right? It comes in trading account, yeah, on the credit side, isn't it? And then it also comes in the balance sheet as a current asset, isn't it? As a current asset. Two places it comes because it's an adjustment, right? Okay, fine. So department A, B separately they have given. You will take it separately. It's really simple. Fine. Okay. So now let's just see how we are going to solve this. Let's see how to prepare departmental trading account. Now see, here we have the solution, and you can see departmental trading and profit and loss account for the year ending 31st December 2017. The first question is how to do this. What kind of rule applies over here? It's really simple. Trading and profit and loss account is always which kind of account? It's a nominal account, a temporary account. We debit all expenses and we credit all incomes. Yeah, that's the rule of nominal account. So you see, here we have the debit side, here we have the credit side. All expenses will come over here and all incomes will come over here. Isn't it? First we'll prepare the trading account. In trading account, we'll take all direct expenses and direct incomes. Then we'll get the gross profit or gross loss, which we'll take to profit and loss. And in profit and loss, we'll take indirect expenses and indirect incomes. Isn't it? And there we'll get net profit or net loss, which will go and hit the capital account. Okay, fine. So now let's see. See here, we have department A and department B. Yeah, two departments are there in this question. So two columns for them. Two debit columns and two credit columns. And then in this question there are little bit complex adjustment like prepaid rent, outstanding expenses. So it's better to have the total column also. Total column is nothing but just the sum of these two. Is that clear? That's all. So total column also we are making in this question. Right. So what do we take first? First we take the opening stock. Yeah, we have the opening stock. How much? 5,400 and 4,900. Just take that. 5,400, 4,900. The sum of that is 10,300. Simple and straightforward. Next we have purchases. Separately it is given. Department A 9,800. Department B 7,350. Let's just take that. Purchases. See here. Purchases 9,800, 7,350. If you add that, that will be equal to 17,150. Now another benefit I'm going to tell you about the total column. If you make the total column, then it becomes easier for ratio. We are using whole numbers, right, for ratio right now. So what's our ratio? Our ratio is 9,800 is to 7,350. But while doing the calculation, let's just say you wanna, apportion this 133. How you will apportion this 133 discount received? 133 into 9,800 divided by the total of both, right? So divide by 17,150. Okay, we'll see, don't worry. So that is what you have to do. Okay, so purchases over. Next we have sales. Yeah, sales, where it will come? It will come on the credit side. You all know. So sales here, see, buy sales 16,900 and 13,520. That is 30,420 in total. Is it clear? Okay. Sales is direct income. It will come on the credit side of trading account. Then we have, see, wages. Wages is also direct expense. Yeah, it is related with factory, labor. Yeah. So where it will come? Debit side of trading account. So see, two wages. Separately it's given 1,340, 240. You don't have to apportion nothing. So total it is 1,580. Is it clear? Simple. Then what? You also have carriage inward. See here, carriage inward 469. It's an item of trading account, isn't it? So now we have to apportion this. You all know we apportion it with on the basis of purchase ratio. What is our purchase ratio? 9,800 is to 7,350, isn't it? So let's just do that. Let me just show you. See, 469, one I will show, okay? 469 into purchases 9,800 divide by 17,150, okay? That is equal to 268. So for department A, carriage inward is 268. For department B, how you will find out? You will not calculate, you will not waste time. 268 minus 469. Okay, the remaining is for department B. Only two departments are there. Yeah, 201. Is it clear? Simple. So carriage inward over. Next, do you have anything else of trading account? No, nothing else. You just have closing stock left. So we take closing stock in trading account as well as in balance sheet because it's an adjustment. It affects two places. You all know. So in trading account, we have to take it on the credit side. Yeah, 2,748 and 2,401 rupees for the department B. So see here, by closing stock 2,748 and 2,401 rupees. If you add that two, that's equal to 5,149. So your trading account finishes off over here. Everything you have taken in from the question. Okay, so now what you have to do, you have to calculate whether we have gross profit or gross loss. See, it's really simple. In this question, what is happening? In this question, the credit side is bigger, okay, Now understand, separately by department you have to calculate, not total. You will see, no, you can't see the total. Yeah, you will take the department A, add up 16,900 plus 2,748, and then you will add up this also, and you will find which side is bigger. Now in this question, this side is bigger, department A, credit side. So incomes are more than the expenses, so obviously there is a gross profit. So 16,900 plus 2,748, that is equal to 19,648. Write this on both the side. 19,648 minus 5,400 minus 9,800 minus 1,340 minus 268, that is equal to the gross profit, that is 2,840. Is that clear? This is what you have to do. Then you have to check for the department B. In department B, what is happening? The same case. Yeah, the credit side is bigger than the debit side. Like this, individually you have to calculate. Okay, don't do total calculation, you will mess up. 13,520 plus 2,401 rupees, that's equal to 15,921. Take it on both the side and then just go on subtracting. You will get the gross profit, that is 3,230. Is that clear? Individually we have calculated the profit. Now what we have to do, we have to just make a sum. Okay, we'll just add these two, that's equal to 6,070 rupees. Okay, that's how you will take in the total column. And then at the below also like that. Okay, you will add these two, you will take 35,569, and then it will come over here also like that. Is it clear? Simple. Then what will happen? This gross profit, what will happen of this? This will be transferred to profit and loss account. Yeah, trading account finish. Right over there we begin the profit and loss account. So see here, profit and loss account started. Okay, by gross profit brought down. Here it was carried down, now brought down. Okay, the same thing, 2840, 3230, 6070, exact copy paste. Is that clear? Okay, now you have to go back to the question and you have to pick the profit and loss items. Yeah, first what do you have? First they said about the rent prepaid. Yeah, we can't take the rent directly. How much is the rent? See, rent is 1870. We can't take it directly. Understand now what will happen. First we'll take this 1870 to rent 1870. Okay, and then what will happen? They have said prepaid rent 370, which means this rent expense which is there 1870, out of this 370 is paid in advance. We have paid it in advance, prepaid rent. That means that is not an expense. How much is not an expense? 370 is not an expense. It is a current asset. 370 has to go in balance sheet, right? But here we have to subtract first. We have to remove 370 from over here. 1870 minus 370 less prepaid rent. Always prepaid rent will be subtracted. Okay, because that is current asset. The benefit of that we'll get in the next accounting period. So that is why we will subtract. And how much will appear? 1,500 will appear. Okay, now this 1,500 you have to distribute among department A and B. Is that clear? Did you understand the flow? From the trial balance we took 1870. We saw the adjustment prepaid rent 370, we subtracted. We got 1,500. Then we apportion this 1,500. In what ratio we will apportion? They have said 2:1, isn't it? For certain expenses they said given ratio 2:1 for rent. Yeah, so if we do that in 2:1, let me just show you. 1,500 into 2 divided by 3. Yeah, 2:1, right? 2 plus 1, so that's 3. 2 divided by 3, that's equal to 1,000. Is it clear? Simple. So 1,000 for department A, and then for the other department 500. 1,000 minus 1,500, that's 500, like that. Clear? Simple. Next, what do we have? See, discount received is also there. That will take over here. See, discount received, by discount received. Now discount received is connected with what? It is connected with purchases. So in purchase ratio we have to apportion that. First you will take 133 and then you will apportion this. It will be 76 and 57 in purchase ratio. Simple. Then see, we have what? Next P&L item. Go sequentially, and then whatever you are done with, just go on ticking that. You will not miss out anything. Okay, after rent, see, next we have salaries. See here, salaries. Salaries also P&L item. It's a indirect expense, right? 2:1 we have to take it. Fine. So see, salaries, first you will take 1320, whatever that is there in trial balance. Then you will apportion this in 2:1. Okay, can we see that? 1320 into 2 divided by 3, that's equal to 880 for department A. 880 minus 1320, the remaining 440 for the department B. Like that you have to take. Is that clear? Simple. Next, what do you have? Next we have, see, lighting and heating. For lighting and heating we have an adjustment, right? For lighting and heating, it's a P&L item. It will go in P&L in 2:1 ratio. That's fine. but there is an adjustment. What adjustment? Lighting and heating outstanding, they are saying 180. So what do we do with outstanding? What's the meaning of that? It means we haven't paid 180. We have still to pay. Yeah, in trial balance, how much is appearing? 420 is appearing. Yeah, this is the expense. Now 180 extra they are saying, so 180 we will add. Okay, see here, lighting and heating, first you will take 420. Okay, first you will take 420 from the trial balance, and then whatever outstanding expense is there, that you will take over here. The expense that we have taken the benefit but we have not paid, so that becomes a liability, current liability. Yeah, so 420 plus 180 you have to do. Always remember, prepaid you will subtract, outstanding you will add in P&L, and then in balance sheet will be current liability. Is that clear? Okay, so 420 plus 180, that's equal to 600. Then this 600 you will apportion in the ratio 2:1, like that. Is that clear? Simple, easy. Next, what do we have? Next we have C, discount allowed. This is also a P&L item, and it will be apportioned on the basis of sales ratio. How much is it? 441. Let's just take that. Discount allowed 441. In which ratio? Sales ratio, because directly connected with sales. So see here, 441 into how much is the sales ratio? Sales ratio is 16,900 for department A, divide by what? The total we have to take, isn't it? So sales we have over here, no, the total 30,420. So divide by 30,420, that is equal to 245. So 245 for department A, and for the department B, balance you will do minus 441. Yeah, the remaining 196 will be department B. Clear? Easy. Next we have what? After discount allowed, we have advertising. The same way in sales ratio only. 738 is there. See, 738 in the sales ratio you will distribute. Yeah. And then we have what? Let's see. What? And then we have what? Carriage inwards is done. Then we have furniture and fittings and plant and machinery. These are assets, but understand on this, the adjustment said we have depreciation. Depreciation are to be apportioned to departments A and B in the ratio 2:1, right? So depreciation we have to calculate. How much is the depreciation? See, it's really simple. Depreciation on furniture is how much? 600 into 0.10. 60 depreciation on furniture. So let's just take that. Okay. Depreciation of furniture 60. Okay. And then depreciation machinery 420. Isn't it? How 420? Because they said now 10% plant and machinery is how much? 4,200 into 10%, 420. Okay. Then how you will apportion this? The question has said 2:1. So in 2:1 it is 40, 20, 280, 140. Is that clear? I don't have to explain you, right? The calculation and everything. It's really simple. Okay, fine, understood. Then everything is over. All P&L items we have taken. Nothing else is left, right? Sundry debtors, nothing regarding that in P&L, personal drawings. No, all these are asset, and drawings we will subtract in capital. So we are done with everything in P&L, right? So now what we have to do? Can we make the sum of total and balance that? No, we can't do that. What we have to do, always remember, we have to separately do the departments first. Okay. So see, in this question, what is happening? In this question, if we just, let's just add the department A first, 1000. Okay, debit side we are adding, plus 880 plus 400 plus 245. Okay, plus 410 plus 40 plus 280, that is equal to 3255, right? And here what do you have? 3255 on the debit, and then here 2840 plus 76, yeah, for department A, the credit side. You see, the incomes are less than the expenses in profit and loss. The incomes are less than the expenses. Expenses are more. So that means we have a loss in department A. We have a net loss. How much net loss? 2916 minus 3255. That is equal to 339. This much loss we have. Okay. So see, how much loss we have? 339. Yeah. Expenses are more and then incomes are less. So the gap is on the credit side of department A. So here it will come by net loss transferred to capital account 339. We just saw, isn't it? This side was bigger, 3255. This came on both the side, 3255 minus 2840 minus 76, that was equal to 339. Is it clear? Simple. Now let's see department B. In department B, what happened? In department B, if we check, let's take the debit side first. 500 plus 440 plus 200 plus 196 plus 328 plus 20 plus 140, that is equal to 1824. Okay. Now 1824 is what? These are the expenses of department B. And if you see the income is, see, 3230 plus 57. Yeah. So let's just 3230 plus 57, that is equal to 3287. Yeah. So 3287, if we subtract that, 3287 minus 1824, that's equal to 1463. This is what? This is the profit. Incomes are more than the expenses in department B. So 1463 will be net profit. Always remember, profit will be the balancing figure on the debit side and loss will be the balancing figure on the credit side. Is it clear? Okay. Then in the total column, what you will do? Just make a sum. 0 plus 1463, 1463. 339 plus 0, 339. Is that clear? That's how you have to take it in the total column. And then here what you will do? In the sum of total column, see, it's really simple. Just add these two. You will get it. Is that clear? That's how. Okay. So this way you have to prepare trading and profit and loss account. Is it clear? Simple and straightforward. After this, what you have to do? After this, you have to prepare the balance sheet. How you will prepare the balance sheet? It's really simple. See, this is how you will prepare the balance sheet. See, here we have the balance sheet. How we have done all this? It's really simple. Understand. First, understand the format. Liabilities, assets. First, you will take non-current asset, then current asset. Here you will take capital first, then non-current liability, then current liability. This is the major, what do you say, categories. Fine. So in non-current asset, what do we have in this question? We have only two: furniture and fittings and plant and machinery of how much? 600 and 4200, right? We charge depreciation on that, isn't it? There was the adjustment. So furniture and fittings, plant and machinery. From the trial balance, you have taken 600, 4200. Whatever depreciation you charge, minus 60, minus 420. Yeah. Depreciation effect will go on two places because it was an adjustment. 60, 420 in P&L and here also 60, 420. Is that clear? And then the remaining amount you will write over here. Okay, fine, understood. Then regarding current assets. Now in current asset, remember, first adjustment was regarding closing stock of how much? 5149 in total, isn't it? So that is what will come over here. Closing stock 5149 of department A 2748 and of department B 2401. Is it clear? Okay. Then prepaid rent. I told you, right? Prepaid rent is the benefit that we are going to get in the next accounting period. It's a current asset. Here you have subtracted 370. So that 370 will appear over here in the balance sheet as a current asset. Prepaid rent 370. Remember that. Always adjustment will have two effects because we are following double entry accounting system. Okay. Then you have sundry debtors. Was there any change in sundry debtors? Any adjustment? Nothing. So directly we'll take 1820 now. Here also 1820. Cash in hand and cash at bank also there has been no change. The same, whatever that was given, current asset 321980. Is it clear? 321980. What about the capital? What is happening over here? It's really simple. First you will take the opening balance from the trial balance 9530. Okay. So see here, capital was given now 9530. So you will take that 9530. Then how much net profit or net loss happened, that you have to see. That effect will be given in capital. Profit will be added, loss will be subtracted. So see, we have net profit of 1463 and loss of 339. So net profit will be added of department B and net loss of department A will be subtracted. Clear? Okay. Then the question also said there are drawings. Drawings means what? Drawings means the owner has taken the money for his personal use out of the business. So 900 you have to subtract from the capital. It will decrease the capital. Subtract. Okay. So 9530 plus 1463 minus 339 minus 900, that's equal to 9754. And then you will take the current liability. Now current liability in the question we have first sundry creditors 3737. You will take it as it is. And then there was an adjustment of outstanding heating and lighting, right, of 180. So that first we added in P&L and then you also have to take it over here also 180 because we have to pay this much to the electricity company of lighting and heating, like that. Okay. Is it clear? So at the end what will happen? This will tally. If it tallies, then your answer is completely right. Is it clear? Simple and straightforward. It was not difficult and it gets tallies. Let's just check. Okay. See, 9754 plus 3737 plus 180, that is equal to 13,671. And then see here on the asset side 540 plus 3780 plus 5149 closing stock plus 370 prepaid rent plus 1820 sundry debtors plus cash in hand 32 plus 1980 cash at bank, that's equal to 13,671. So you see it tallies. So our answer is right. This is how you have to do it. Really simple and straightforward. You understood, right? Prepaid rent always subtract, outstanding always add, and then prepaid rent will become current asset in balance sheet, outstanding will become current liability in balance sheet. Okay, fine. And then the basis and everything is really simple. Just see the relation, how it is connected. Discount allowed is connected with sales, discount received is connected with purchases. So in that basis we have to, apportion it, distribute it among the departments. Is it clear? So see here. Yeah, now you can take the screenshot if you want. Yep. Let me just show you the question. Yeah. So that's it. See you in the next video. Bye.